Hi, I'm John Crane, and I want to use this presentation to illustrate how the action-reaction theory can be applied when swing trading. One of the most common questions I get asked is, exactly what is action-reaction theory? Well, simply put, it just means for every market action, there will be an equal and opposite market reaction. And of course, the key point in this theory is trying to determine the center of the cycle. How do you determine when the action segment of the cycle ends and reaction segment begins? And it's very simple. It's very simple. It's all due to understanding of market structure, because there's a certain pattern that occurs in the center of the cycle and determines the exact center where the action ends and the reaction begins. And if you can understand that, you can use the past action and use that to make a future projections in the market with a high probability of success. So understanding that market structure is very critical. The next thing people need to understand is market behavior, because after any signal is triggered, the market should behave in a certain way if it's going to be a good trade, or if it's not behaving that way, then you know there's something wrong with the trade and it may fail. Understanding the difference between the two is critical. So instead of going into a long drawn-out explanation of what it is, I'm just going to illustrate the action-reaction theory on this market. First thing, if you look at this chart, you'll notice a couple things missing. There is no name. I don't have the market identified, because it really doesn't matter what market you're trading, whether you're looking at equities, futures, or Forex, because a chart is a chart. Next thing you'll notice that there's no prices on here, and time. So you don't know if this is a intraday chart, 5-minute chart, 30-minute chart, or a daily chart. Once again, it doesn't matter, because market behavior is the same on any time frame. Now, there's only half a chart here, so you say it doesn't give me much information. But actually, this chart gives me all the information I need to make any kind of a future projection. First thing I'm going to do is, I told you about the reaction swing. That's the pattern that identifies the center where the reaction begins and the action ends. And it's right here. That's called a reaction swing. And this is the beginning and this is the end. I call that the beginning of the end. So now, if I'm going to look at the past action, I just look at this market pattern sequence right here, and that gives me everything I need to know to make my future projections. The first thing I want to determine is a direction. And look at this information. I determined that the next direction is down. Okay, now that I have direction, I'd like to know how much time or how much longer in duration will the reaction segment of this cycle be. And to do that is simple. I just look back. I just look at the action that's already occurred. So I look into the past. And the way I do that is I do what I call a time price projection. Easiest thing to do is I just count the bars back to the beginning. I just count the bars back to the beginning. So starting here, I count all these price bars back to this high close right here. And what that does is that gives me 22 bars. So the reaction segment, which is marked in green, now I figure that should last for 22 price bars. So I have direction and I have most probable time frame for this reaction cycle to continue. So this is basically what it looks like. Marked the red, the action segment is marked in red and the reaction is marked in green. Right in the center, that's kind of the balancing point. That's really the balancing point where the action ends and the reaction begins. So let's see what happens in the market. You see right here, the reaction did continue down for 22 price bars, just as projected. Matter of fact, the lowest close right here was on the 22nd bar. And then that completed the cycle. The market turned up from there. One thing I want to point out, see right here, you have another reaction swing occurring. So therefore you're looking at, there's another cycle inside of the longer term cycle. So let's see, will that help? Let's see what happens here. I call this a continuation pattern because this type of cycle usually occurs in the middle or inside of a continuing trend, and it identifies to you whether the trend's going to continue or if it's going to stop. So it can be very valuable information. But I do it the exact same way. I have E and F identified as reaction swing, and I just measure in the past to beginning of the sequence, going back to the low, which of course, if you remember, was the beginning of the previous reaction swing, and that's 15 bars. When I count right here and start doing my project forward, 15 bars. It occurs actually 1 day after the previous projections. So you have both cycles giving you exact same time frame. So now we've looked at direction and time frame. The last piece of the puzzle, of course, is want to know, price projections. If it's going to go for 22 bars, how far is it going to go? Can I make a price projection? That can be done basically using pretty much the same process. You see here is the same chart, and drawn in here is the Andrews Pitchfork, which can be found on the most basic charting programs. And I just use it. I anchor it from B, which is the high of the move, and of course C and D, the reaction swing, and it's pointed forward. The thing is, what I do is, remember I made the back projection of 22 price bars. I just go in the future, the 22 price bars, and I mark. In this case, I mark the lower parallel line where the time and the line cross. The next step is I draw a line from the low at C to D, and then I use that line and I draw a parallel line right at where the time and the parallel line cross, and that gives me a reaction line. That gives me a target objective on the downside. This is a way to identify price when using the action reaction theory. As you can see for this chart, that's exactly what happened. The market dropped right down to the reaction line, right in the projected time frame, just as projected. So just that basic information I started out with right up here, this information from this right here, that was enough to give me the direction of the market, time to give me the time frame that the cycle needed to complete itself, and it also gave me a price projection. It gave me everything I needed to know on this trade. So if you found this information interesting and you'd like to learn a little bit more on how to use this in other markets, visit our website, tradersnetwork.com. Also, check out reversaltracker.com. It's our software that does all these projections for us. We have a lot of other information in there. Or give me a call. Number is 800-521-0705, or email me if you have any questions. If you visit our website right now, we are offering a 30-day free trial of our Traders Market Views Swing Trade Report, which has daily information on new trade recommendations and plus intraday updates on Twitter and on our blog. You can also, we'll set you up and you can use our RT Swing Trader software free for the next 30 days.